Hello everyone and welcome to my morning report charts appraisals on Friday the 8th of September with me, Richard Perry, market analyst at Hantec Markets. Wow, what a breakdown we saw on the dollar. We've seen euro dollar breaking strongly higher, we've seen dollar yen breaking strongly lower, and the main driver was initially the ECB meeting that we saw yesterday. Draghi tried to, as much as he could, I think, hold the euro lower, but the suggestion that there was going to be some sort of decision made in October certainly has got the bulls sort of racing higher again. Also, a slightly, probably mild downward revision, maybe less than the market had been expecting, to downward revision to inflation forecasts, also helped to support the euro yesterday, and there was a strong upside break. I'll show you through my analysis on the euro dollar in a bit, but certainly the dollar sharply lower on the dollar index. Not yet below 91, but not far off it. But the key move you can see here is on the treasury yields, the 10-year treasury yield flirting with that 2% level, incredibly low there on the treasury yields, and also the 2-year as well falling sharply, and that has certainly impacted. Now the real chart that we want to look at, I think, in reaction to the fact that bund yields were falling, is this chart here where the treasury yield bund yield spread is still tightening, and that has a strengthening impact on the euro dollar, and that is helping to drive euro dollar higher. As you can see, there's a correlation here that you need to make yourselves aware of, I believe. So the dollar is lower, and that is across the majors today. Now, equity markets slightly consolidated yesterday, and that sort of consolidation sort of has continued today. A little bit of weakness in the European equity markets, but the moves, I think, certainly on the DAX could even be a buying opportunity. But it'll be interesting to see how the DAX sort of holds around these sort of levels. Now, in terms of our data today, we have had the China trade data out overnight, and trade balance actually narrowed on the surplus to $42 billion. But this is the interesting one here, the imports higher than expected, and coupled with the fact that the dollar has been weak, you've seen the Aussie and the Kiwi really strong today, breaking sharply higher, driven by that higher than expected imports data for China. We've also had UK industrial production numbers coming out in line, pretty much in line with expectations, mildly beating on the manufacturing, but in line on the industrial, helping to support the sterling there. But other than that, nothing really, apart from you've got a bit of Canadian employment data. Unemployment is expected to come in line at 6.3% at 1:30 this afternoon. But my charts today, as I said, Kiwi dollar. Big move on Kiwi dollar. Look at this. I talked earlier on in this week about the Kiwi dollar breaking down below 72 figure, but we had that sharp move to the upside on Tuesday, and that's sort of continued to put pressure on this downtrend. I was sort of looking at this yesterday thinking, well, this could now start to turn around. You had the MACD lines beginning to cross higher, but that sharp bull candle that we've seen today has really turned around the outlook. Momentum indicators improving strongly now. MACD buy signal, stochastics gaining, RSI above 50, all really strong moves. Now we've got this overhead resistance that the Kiwi needs to break through, 73.45. Key resistance, having been resistance in June, became key resistance again in August. Now, breakout above that would certainly turn the sentiment sharply on the improving scale once more. Needs to continue higher. Closing above 73 figure would certainly help. That was a key reaction high within the downtrend. Basically trading around that level now, but certainly the 73.45 resistance is the key level to watch out for. A move above that would certainly gain momentum to the upside, and there is upside potential. So the market has just dipped back towards 73 again, holding support. There is a minor sort of breakout level at 72.60. That was Tuesday's high. and that is old resistance turns new support, and that would be an area where you'd start to look for a buying opportunity, 72.65 to 73 figure. So certainly my outlook from earlier on in this week has been turned around, and I'm now turning more positive on the Kiwi again, with the dollar having broken sharply lower today. So that confirmation of a bullish position on the Kiwi would come on a move above 73.45. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.